Welcome, Kellogg community. I'm Michaela Doyle with the Kellogg School of Management. Thank you for joining us today for Conversations with Kellogg Leaders featuring Ron Tamir. In this webinar series, Dean Corneli speaks with Kellogg alumni leaders on timely issues and challenges facing the global business community. You can catch up on our prior webinars in this series at our virtual events page on the Kellogg alumni website. We will put a link for the site into the chat now. Today's presentation will last 1 hour, and we invite you to submit questions for our speaker at any time using the Q&A icon that's located at the bottom of your screen. We will address audience questions throughout the conversation. With that, I am happy to welcome Dean Francesca Corneli.
Hello, everyone. I'm so delighted to be back with another incredible speaker for our great series. And it's also, this series, as you know, it's a great way to show not only that we have incredible alumni, but that they are throughout the world and making impact everywhere in the world. And it is my pleasure today to welcome Ron Tamir, who is the founding partner of Kaedan Capital, and he will talk about his expertise and leadership in the world of venture capital and entrepreneurship. Every time I met Ron, I could feel his passion for Kellogg, his support to Kellogg. I know last September I hosted an entire group of students who came to learn about the venture space. So thank you, Ron, for joining us today.
Hi, Dean Corneli. Thank you very much for hosting me. I'm very grateful and honored to take part, and always a pleasure to reconnect with you and Kellogg in general.
Yeah, that's great to have you. Now, let's talk a little bit also about the start of your incredible career, because I hear that your parents were entrepreneurial role models growing up. Can you tell us how do you get into this career?
Yeah, so I grew up in a family business environment, actually on both sides. On one side, my grandfather, who immigrated from Poland, he built and ran a textile manufacturing business that he started. And together with my mother and my uncle, they developed it into an export textile business. And on the other side, my father, he actually founded an advertising agency that became one of the largest ones in our country. So talking about customers and employees and cash flow and in general business challenges and opportunities was in kind of an integral part of my growing up period. And in hindsight, if I kind of connecting the dots today, I realized unconsciously that provided me with the confidence to take risks and to start my own business later on in my career.
That's very interesting, right? Sometimes later in life we see things that didn't happen by accident. But so then you came to the US, right, to continue your education in business management, thinking of marketing, finance. So how did you come to choose Kellogg?
Yeah. So at the time, I was interested in expanding my general management knowledge and in specific, learning marketing management, in which Kellogg was reputed to excel at. I think it was ranked and probably still is like the #1 program.
Yes.
So it was my first choice. And I spoke, before my decision, I spoke to several alumni. And I was also fortunate to speak to the late Dean Jacobs, who was visiting. And I remember I was very, very impressed by the quality of the people and the excitement that they all shared from the experience and the focus on the teamwork and the close interpersonal relationship. And so overall, I felt it's a good fit for me.
Yes. And what appealed to you about marketing as a career field, really?
So I was always intrigued by what kind of moves the needle So what are the consumer insights that drive people to prefer one product over another and even pay a premium for a desired brand? And the challenge of crafting the right positioning and creating the demand for your product or service was always appealing to me, and the ability also to see immediate results and to touch and influence like the actions and the desires of millions of users was always something that fascinated me.
That's very interesting, right? Because then I can see how that then developed in your entrepreneurs and venture capitals point of view. And I think that's why also we have so many students now that want to enter into that. And it's a natural progression for marketing. So it's nice to hear that. That's what you expected from Kellogg then, is it? Really how to influence your customers. That's great. And then you went to Coca-Cola USA, right? That is big league consumer marketing. What was that experience?
Yeah. So first of all, it was an amazing one, really an excellent learning period. And I think what opened the doors for me was definitely Kellogg. I wouldn't imagine, quite honestly, before I came to the MBA that such an opportunity would be open for me. The brand management team was comprised of amazingly smart and creative minds, and I felt very fortunate to work with them. I worked on the tea and fruit juice brands, Cool from Nestle and Minute Maid. And I was there very exposed to principles of how to understand the consumer motivations and how to differentiate and position your brand and how to develop relevant marketing programs and plans. And I also was lucky to be involved in the development of new products. I worked on the development of new flavored teas, iced teas, and it involved the cross-functional work with R&D and operations and sales. And it was a very challenging and a great experience for me. I truly enjoyed it, and yet while we lived in Atlanta, my daughter was born there, and with two kids at home, my wife kind of raised the flag and signaled that it's time for us to head back home, and so we did.
That's always the case, and eventually, so you returned to Israel, and the internet revolution was really in its early stages. So what really inspired you to start your own business?
Yeah. So while I was at Coke, the online was just starting to take off, and we even had some joint programs with AOL and some other tech companies. And it was clear to me that the internet is going to change our lives dramatically. And I wanted to leverage my experience with marketing management of physical goods and kind of convert it to the marketing of digital goods. And Israel's high-tech industry has just started booming at the time, and I felt that I want and I must be part of that revolution, and hopefully do that with an ownership stake. So I decided to start Kaedan, my private investment firm, and invest in internet ventures with the hope and the vision to invest and build digital native businesses. I began to invest with small angel checks in young companies in the local market and consult their CEOs on how to develop the business and the teams. And one of my first investments was in digital media, in a sports news site. At the time, they called it a news portal.
Let's see.
Yeah. So that site. So I invested there, and I joined two founders of this sports news website, and I acted as the company's chairman. We worked for several years, being responsible for the biz dev and the marketing. And the internet site, we were lucky, it became the #1 sports website, and also one of the top 10 destination sites overall. We then expanded the business into new digital platforms in the media space. We were the first to introduce to the market mobile apps, both on iPhone and Android, and first to launch Facebook social pages and YouTube channel. And eventually we also launched kind of the counter to the regular route. We also launched our own sports TV channels on the cable and the satellite platforms. So it evolved into a kind of a local ESPN, so to speak. And we grew from around 10 people to 150 operation. And on the way, we made a nice exit. We sold half of our equity to the largest media group in our market. And I continued to, until today, to stay as the chairman of this group of companies.
That must have been an amazing experience to grow it from such a small to a large media company. That's amazing. We will ask you more about that and ask you, but I just want to, again, talking about your start and so on, right? When you arrived, what opportunities did you see in Israel startup companies at the time?
Yeah. So I think Israel was a hub of mostly technical engineers and developers. But in the early 2000s, there were also several internet companies that were offering advertising and search and gaming solutions and products. And they generated a pool of very talented performance marketing, which is key to scaling online. Very strong people that are very strong in analytics and data and business intelligence. So I saw a huge opportunity in backing strong teams that are comprised of strong developers on the one end and performance marketing executives on the other end, to build digital native businesses out of this distant small market. And with the emergence, I think, of the mobile app stores in 2007, later on the social networks around 2010, with the emergence of Facebook and so forth, the world has become really digitally flat. And so I wanted to capitalize on it. And after I did this local exit from the digital sports media business, I decided to switch focus and of the investments and to export mainly. And I looked for a team that aimed to leverage this new distribution channels and build global digital native businesses.
That's amazing. But as a VC, when you invest, right, your reputation is very important. So when you were small and new, how did you build the reputation? I can see you see that amazing potential. I mean, it was very early on. You really saw the future. But then still, what was your reputation to help you? How did you build the reputation?
Yeah. So I must. It wasn't like an immediate success, and effectively I bootstrapped it, just like a startup does on its own, in a sense. So along the years, I joined forces with, because my background is more of a management, marketing skills. I joined forces with my partners, and they have more product and technology know-how. They were also operators in internet companies themselves, and I think. Together, they brought in a network of tech executives and also expanded our outreach to a stronger and larger deal flow of new companies. We went to the tech events and all the meetups. We were also very active as mentors and advisors in all kinds of tech accelerators. However, I think that the most effective means to build their reputation in the first few years was actually word of mouth by the founders themselves, that they spread the word in the community. We worked very close because we're a seed investor. We come in building their businesses like really early on. And I think that those founders that recommended their peers to come first to us to raise funds was probably the most effective means to build that initial reputation.
And who are you competing with when you were trying to get these deals?
Yeah. So at the time, the market was kind of, I wouldn't say close to a blue ocean. It wasn't as competitive as it is. It was much less crowded. Effectively, I think there were about 10 to 20 VCs and several dozens of angels. So the market wasn't as competitive. So that was an advantage for us as newcomers. But I think we differentiated ourselves from them by focusing on the very, very early stage. Sometimes we were even part of the brainstorming sessions in our offices with the founders on their idea, even before they registered the company. So, and most VCs at the time were focusing on later stage, on more opportunities, on companies that were more established. And I think that in addition, the fact that we invested our own private funds, in a sense, putting our money where our mouth is, that had a very powerful impact on the entrepreneurs, because they saw us as true and fully committed partners to their journey.
That's amazing. And you've been talking, Giselle, about the special relationship with the founders, especially at the big. Like, does that continue? Like, being such an early investor in a smaller market really does create for you a special relationships there?
Yeah. So I think it's a small market, and on the downside of that is that it is limiting, obviously, the amount of opportunities that you can review or check. On the other hand, yeah, it's an advantage both in terms of due diligence processes, but also in terms of portfolio management. So on the due diligence side, I think we have here what we call the two fingers rule, meaning you need probably two connections to reach pretty much anyone you want to talk to, and if you want to gain feedback on an entrepreneur. So you can check and validate the people's reputation and character very easily. It's a small society, and everyone kind of knows everyone, either from high school or military service or prior work. And I think in the sense of later on managing the relationship with your portfolio. So our portfolio companies are usually located like a few miles away from our offices. So it's really this intimate geographic density allows us, to visit and meet them very frequently. And that's also, I think, an advantage of a relatively small market like ours.
That's amazing. And you were saying it's a small market, but at the same time, Israel has a surprising number of startups per capita, right? Is it called the startup nation? So can you describe the entrepreneurial ecosystem in Israel?
Yeah. So if you enter an elevator in Tel Aviv, most chances are that you will find somebody speaks about his or her startup, or talking about the idea that he has, that he plans to start one soon, I think. But more seriously, yeah, it has evolved very significantly in the past 20 years. And today it's a very thriving ecosystem for innovation. Today there are about almost 300 active VCs in the market, so it's much more competitive. All the big tech companies like Google, Facebook, all the Magnificent Seven, they have very large R&D centers here. And in total, there are more than 450 multinational companies that are active here. In fact, if you look at the numbers, today there are more than 7,000 startups active on a nation of 9 million people. So that's a ratio of actually one startup for every 1,200 citizens, it's the number one amount of startups per capita in the world. And the same goes, by the way, for the relative per capita VC investment. So it's a very dynamic and interesting market. It also has the most public companies listed today on New York Stock Exchange and on the Nasdaq, apart from the US and China. And it has generated over the past decade more than 80 private companies that are considered unicorns, or companies that are valued over $1 billion. And that represents about 10% of the global unicorns. So I think it is over-indexing as an ecosystem on many fronts, both on innovation creation and innovation funding.
So actually, it's interesting where you're mentioning about all these companies and New York Stock Exchange, NASDAQ. I mean, it's a small market, but then on the upside, you have launched a lot of large global companies. So what has allowed this global outlook to flourish?
Yeah. I think since the country started, it was clear that it needs to target international markets. Businesses are basically located in kind of an isolated island that is basically the size of New Jersey. So it's very far from the key Western economies. So I think that reality kind of forced the entrepreneurs to be in a mindset from where you think global from the get-go. So, and the local market is a pilot market at most. And today I think there are also, in terms of the management, there are a lot of experienced executives that worked in big US companies, and after they returned home, they brought with them a lot of knowledge and understanding on how to build and how to run global businesses. And another, I think, element is that people by nature are very curious and also travel frequently. I think the statistics are that more than 90% spend some time overseas. And so I think they bring back with them ideas and develop products and services accordingly because they travel so frequently. I think, but I think, in terms of the local entrepreneurs, I think that, I think the culture here is something that's worth mentioning. I think there's a mixture of historical and mental factors that contribute to the fact that so many big companies were generated here. I think historically, the country itself was kind of a startup. So from inception, like you had to deal with many challenges. With the lack of infrastructure, and we created the kibbutz format, so everyone assists everyone and work together to build some type of an advanced economy that sustain itself. And so it was built around developing this human capital rather than exploiting natural resources. And I think engineers had to improvise and create like original solutions. So, for instance, the country is very hot, and so we suffered from a lack of water. So people invented smart irrigation droppers so farmers can efficiently water their fields, and also very advanced desalination systems. So you can use them to filter seawater, and then that allows sufficient water for personal use. And I think that also mentally, founders grow up with what I call the Jewish mom syndrome, meaning your mom will never be satisfied about what you achieved, and she will always push you further. And the mantra is you can do better. So I think that's a lot of the drivers behind it, and the state of mind overall is like that. Nothing is impossible. That it's broken, but we will eventually fix it. And people are accepting failure actually as a learning opportunity. So and as a natural part of life. So I think that's something that is also important to indicate regarding the character of the founders.
That's a very interesting, putting in perspective why, how a culture of a country makes so much a difference. Now, coming back to you, Kaedan is an unusual venture capital firm in the sense that it invests in self-finance. You mentioned before, right? It doesn't have outside investment partner. You mentioned before that you invest your own money. How's that has impacted your investment choices?
So it made it a longer and a harder journey, quite honestly. We initially made fewer deals, and we wrote smaller checks. And as the business progressed, we made actually profitable exits. We were able to reinvest profits and increase our check size and the number of investments. I think that when you manage your own funds, it means you can concentrate on what I think is the fun part. That is reviewing a new deal flow and managing existing portfolio, rather than spending time on raising money for your next fund. The financial downside is that there are no management fees. So basically, the business is 100% performance-based, meaning you are compensated only by your portfolio success. And in that sense, so either they become profitable and pay out the dividends, or they're being sold in an M&A or an IPO. But I actually believe it's one of the reasons we were able to demonstrate a higher than average hit rate with our portfolio. So we don't give up really easily, even in a company that, and it's usually we start, it's going hard. It's never an easy task. And I think at the end of the day, it's a trade-off between flexibility and scale. So if we would have raised other people's money and we were offered that many times, we could obviously have made more investment and invest more capital. But I think that would mean that we would have constraint on the investment areas or the investment periods in which we can invest or sell holdings and so forth. So as a self-financed firm, we can actually even bet against the market. So, there's the saying of Warren Buffett, being greedy when all are fearful. So for instance, in the waves of 2000 and 2010, 2009 and 2010, just after the 2008 market crash, and also in 2020 when the pandemic erupted, we actually countered to the market. We increased our rate of investments. And we were, on the other hand, we were very fearful when we felt everyone was greedy during the waves of 21, 22, the bubble. We felt that valuations were inflated. So we actually almost stopped completely new investments and focused on either raising funds from growth stage investor to our existing portfolio, or liquidating some of our, what we felt are overvalued companies in secondary deals. And I think that type of flexibility is something that is enabled when you have that type of self-financed firm.
No, I completely agree. That's right. That's why I hear, right, there's a lot of criticism of large private investments about when it gets too large and they completely driven by fees versus performance. But talking also about your investment, you have so many consumer-facing companies, right, versus business-to-business sector. What do you like about working in the consumer space?
Yeah. So first of all, my partners and myself, we think more, we do both consumer and B2B, but mostly consumer. We all had a prior experience as operators in consumer-facing companies, consumer goods, media, fintech, gaming. So I think we all feel more that we have domain expertise in there, and we feel more comfortable there. I think in addition, in B2B companies, the sales cycles can take anywhere from 3 to 12 months, depending on the industry. So it's a long and tedious journey. What we like in B2C is that the immediate impact on the business KPIs, and you can track and measure it on a daily basis. So sometimes if you even change product features or pricing or even the marketing promotion, it can change the KPIs, and you can see it in the dashboard in the next morning. So, and by the way, it's true in both ways. Meaning, if it doesn't work, and that happens a lot in the startup world, and the product is a consumer-facing one, you can understand it fairly quickly, and after an investment of a few $1 million. So you can either pivot or shut it down. And I think that in business or enterprise software ventures, it requires more time and more capital to reach such a conclusion. So I think those are the main reasons.
Sorry.
I think those are the main reasons why we feel more comfortable with consumer-facing companies.
Yeah, that makes a lot of sense. And I have a lot of questions coming in the meantime. Let me just start by picking one and I'll keep coming back. One says, what are the most important areas you are investing in over the next 5 years?
5 years is a long time. I mean, I can talk about the next. I think we might. I think obviously AI. We will talk about it maybe later a bit further.
Yes.
But I think the pace of innovation and change is so fast. We all learn as we go together with our founders. Definitely, I think but I do say that like the generative AI is amazing, and I think it impacts a lot of functions and a lot of industries, and the way we all work and interact, and so I think like if I look today in our deal flow, I wouldn't exaggerate if I would say that 90% of the new deal flow is AI for something, so I think definitely machine learning and AI are places that we look into deeply, at least for the foreseeable future. I don't know, next year or two. But it changes very fast. I can tell you that when I started Kaedan, like some of the areas that we eventually invested in, we didn't plan for it, and it evolved throughout the year. So. But definitely, I think the Gen AI is one that will take a significant role in new investments.
Well, that's great. We'll come back to that because there's also other questions related to that. But first, I also wanted to ask you because, okay, you told us why you were good at also avoiding really bad outcomes. But that doesn't pay, enough credit to the fact that you also had a large percentage of successful exit, and you actually launched 3 so-called unicorn companies. So, what is it that is the key reason for your success, achieving that?
Yeah. No, so we also had some formidable failures, but yeah, I think where we did succeed, I would say, I think passion. I think I really love what I do. Being this intersection of innovative ideas and bright entrepreneurs and diverse industries, and quite honestly, every day we come to the office and we meet innovators in their 20s or 30s and evaluate new ideas, Gen AI or others to disrupt different markets. I think the team we've built is my partner and I work together now for more than like 15 years now, and we complement each other skills wise, and I think we have a lot of mutual respect. So I give a lot of credit to them. I think being kind and working well with the founders, that kind of relates back to the reputation that you asked me before. But a lot of time, because we come in very early, we're kind of a personal coach, a mentor, or even as kind of sometimes a psychologist, especially to the CEO. So I think founders in turn, later on, they recommend others and they refer them to us, because I think one of the things we're most proud of is that we have several teams that are serial entrepreneurs that can choose who they will raise funds from, and they come to us to consult on the next big idea. I think persistency. So I've been focused on doing seed investments for more than 20 years now, and that kind of developed what can be called like experienced intuition. So I mean, we've met with like thousands of, maybe tens of thousands of entrepreneurs to date. So if there's the book of Malcolm Gladwell, The Outliers of doing like 10,000 hours of practice hours, we passed that, and I think kind of developed the eye, so to speak, to identify strong founders that can really execute on their vision. So I think after you're meeting so many, and to most of them, more than 99% of our funnel, we basically had to say no, right? Because we see around 800 deals, and we invest in several few. sometimes we don't even invest in one company in a year. So it's dynamic. But I think after so many years, you develop that type of expertise of knowing if there's the right ingredients in the team and the founders, and they can take it to unicorn level down the road.
Yeah, that's amazing, and I'm intrigued. You keep coming back to this relationship with the founders. Can you tell us a bit, like one time when you worked with a startup to guide a major change to a product or a product market fit? How did that work?
So yeah, I can see we have like one of our portfolio company is providing an event management software, actually a B2B, for events and conferences for companies to manage a software solution. And in March 2020, they were caught with, like all of us, with the coronavirus, and it spread all around the world. And consequently, obviously, all in-person events were canceled. And I remember that me and my partners, we were talking about the effect of the pandemic on all of our portfolio. And unanimously, we all felt that this company is probably at the highest risk. We were actually thinking maybe it will be shut down. And because at the time, no one really knew how long will the pandemic last. And they basically saw a full stop in the usage of businesses and also in their sales pipeline. But the team was very resilient. It wasn't the first pivot that they did. They did already a pivot previously from B2C actually to B2B. And when they saw that, they decided to take all of the company and develop in a matter of a couple of months. And they took all the resources to develop a new virtual event solution with a video Zoom, just like this interface, and offer it to all their existing customer base. And because companies were looking to somehow to keep the connection and interact with their customer, the demand was immediate. And many enterprises, actually even new one, and some of the largest corporations like Microsoft and Amazon at the time, were actually buying this new hybrid solution with the virtual events interface. And ultimately, they managed to grow their sales by the next year by 400%. And instead of closing the business, it became a real high flyer in our portfolio. And actually, they even managed to triple their valuation by their next financing round. So I think that was kind of a major change that had an amazing impact on the business that we were lucky to be part of.
That is an amazing story. Actually, there's a question here on the opposite side. So I see a question that's, when, as a VC investor, we work with strong-willed founders, and you have clearly different views on company strategy, how do you persuade or work with this founder?
Yeah. So I think venture is a relationship business. And I think you have to be I think the founders are the one at the forefront. We as an investor, I think we are at the backstage. I can consult to them. I can say we can say our position and from our experience sometimes, and provide them with tips from other companies and other situations we faced in the past. But at the end of the day, it's a matter of building the trust, building the relationship together with the founders. I think the fact that we were there from the really early beginning, when they just had the idea and the dream, that kind of improves that type of relationship because they see us as a kind of a co-founder in a sense. So that helps us to persuade them. But sometimes they don't listen to us. And that's okay, as long as they take the decision. Sometimes they make mistakes, sometimes they're right and we're wrong. That's fine. But I think at the end of the day, they are the leaders, and we're there to support them and to consult them. But I don't think the decision, the ultimate decision is in the founders' hands.
That's a great insight. And there's another question here saying, if you were creating your investment fund from scratch today, how would you get started? Any advice or words of caution from your past experience?
Yeah. So I think try to focus on areas in which you have domain expertise. I think we've had some, as I said, some of our failures where we tried, we deviated from the areas in which we had prior experience, and I think we paid a toll. We paid a price for that. So I think focus on areas that you really understand and you are also passionate about, things that excite you. That's one thing. And I would also, I think you have to build, just like any other profession. It takes time. So start small, be patient, and increase as you go along, and learn from your failures, because for sure you will fail. The statistics are that more than 90% of startups fail. So if you want to be better than the average, I think do it carefully and do it professionally, and hopefully join forces as soon as possible with other colleagues that complement you in functions that you're less you feel that are not your core expertise. So I think for me, for instance, it was really important that, early on. It took me several years, but when I joined forces with people that came from a technology and R&D product experience, I think together that elevated the level of our investment. Our investment were much better throughout the years by joining those forces together, and each of us brought in his own expertise, and together that made it much easier to know how to select and to consult and help companies in which we invest.
That's a great advice. I just wanted to ask you also, there's always this discussion, right? How specialized versus broad you as an investor should be. And you have invested in a lot of startups that go from consumer apps, e-commerce, digital media, gaming, digital health, AI. I'm sure I'm missing a lot. So does this diversity help to hedge risk, or on the other side, don't you have the problem of how do you know all these markets? How you balance this?
Yeah, so I think it does hedge risk. We're indeed diverse because I think we feel it is necessary in a small market like ours, and I think that also being exposed to multiple industries does reduce risk to a certain extent. At the same time, this diversity has its boundaries. We do mostly focus on software, like 99% of our investment were on software businesses until today, which is easier to scale internationally. We do mostly consumer-facing companies. And we also avoid investing in areas, and that goes back to my previous answer, in areas which we do not feel we have enough domain expertise in our team, like medical devices or chips. So those are areas in which we still, even though we're generalists, we stay away where we feel we don't have enough knowledge.
And you also, as you mentioned, an early investor, but you accumulate a lot of experience. So how do you go about choosing an investment in this highly risky stage?
Yeah, I think it might sound as a cliche, but from my experience, selecting at the seed stage, selecting the right team is the most crucial element. in our investment due diligence process. We're looking for entrepreneurs that whose eyes shine when they talk about their venture. We do have our checklist. So obviously our investment checklist, we look for unique differentiated products, and we look for a sizable and positively growing market, and we look for a reasonable go-to-market and business model, and hopefully also IP, some intellectual property with a technology mode. But I think running and investing in a startup is like riding a roller coaster, okay? Financially and emotionally, quite honestly. There will be like 180 degrees turns in the company's product, just like the one we discussed earlier, in its market, in competition, in technology changes, which are so rapid. So pretty much anything in your original investment thesis, except for the people, will most probably change along the journey. And usually it takes, by the way, 6 to 8 years on average. So I think you have to believe that the team that you chose will be able to recruit the best talent, build the best team, to attract customers, and also to raise from a growth stage investor later on in order to build a business. And I think we're looking for founders that they have complementing skills. And the CEO, which is probably the most crucial role, he must be a very strong people's person. He must be open-minded, flexible, and listener. And each of these words is very crucial in my mind. And with the ability to execute and change course really fast, pivot quickly along the way. Because that happens almost in any startup we've invested until today. So I think that's probably the team and the CEO in specific are the key factors to look at, especially at the seed and pre-seed stage in which we focus.
Well, I hope everybody's taking notes because it feels like all such amazing advices. Now, I want to rush because, we touched before artificial intelligence. There are questions in there. So tell us, what impact are advances in artificial intelligence and machine learning having in the sectors that you invest in?
Yeah, so it's immense. I mean, it's like I think it might be even bigger than, in a sense, than the internet or the mobile revolution. I think that's I saw a graph that VCs poured into AI like more than $50 billion in 2023, and I think the pace is very fast, and the disruption, as we discussed, goes across many industries and many functions. So it's not only in new venture creation ideas. So we have pretty much a lot of our deal flow, as I said, is like AI for something. But I think it also on the operational day-to-day activities, it really impacts all of our portfolio. And the integration of AI today is made as an assisting tool to the team, and it's affecting like customer service and product development and coding and marketing. For instance, in the gaming space, we have several gaming studios that are using AI today to offer like 24/7 customer service and to create more game assets and promotion. And I think that the scale and the amount of content that they can create is much faster and much better today due to the impact of AI. It's so fast. I mean, we like every day there's more and more innovation, and we learn together with them. Quite honestly.
That's very interesting. There's a question here that is asking, in general, for Israel, what role is Israeli VC playing in the AI and semiconductor competition in the world? What's your perspective? So semiconductors is an area in which we do not invest actually at Kaedan Capital. So I'm probably not the best one to answer that one. I'm not as familiar. I know there are several startups that are doing interesting stuff there, but
quite honestly, it's an area in which we don't invest. So I'm not probably the best one to answer. I can give you.
But there's
examples.
also AI. Maybe for AI is how much of an impact Israeli VC is having in AI, you feel?
So I think it's very similar to like I think all of us, both internally in the portfolio and also in new deals. Like I can give you examples of our companies that are using AI if that's
no. I was just asking in general.
Yeah,
Yes.
I don't know if we over-index on that. Obviously, a lot of resources and human capital, everyone focused on that and how to do it and do it also responsibly in order to, and mostly as an assisting tool rather than, and helping people perform their jobs better rather than replacing them. So I think those are ethical questions we all face. But I think it's pretty similar. Like it's pretty similar to the other VC markets. I don't see many differences. I can give you I have one example I can give is on a market need one of our portfolios saw is in English speaking, for instance. So billions of people want to learn English, but most of the available solutions today are for writing and reading English. And the most sought after capability is to know actually how to speak the language and to practice speaking. So one of our portfolio companies is actually using large language models, GPT-4, and to enable people to practice and speak fluent English on any subject they want. You want to prepare to a job interview or a sales presentation. You're using a mobile app that is essentially available for you anytime, anywhere. It's a kind of a professional personal AI tutor that is a very smart bot based on the LLM. And it offers you also tracking, so personalized feedback and scoring. How is your speaking progressing on many attributes? So they're integrated very nicely, I think, Gen AI into that solution, and they're growing nicely, actually, mostly in Europe. Another example I can give and share is, today a lot of businesses want to understand who are their best users, customers, and to know how much does it cost them to acquire them, and predict what is the long-term value of each of those customers, so they know if they should acquire them digitally. So we have a portfolio marketing technology company that what they're doing, they're using machine learning and AI models, and what they do, they analyze first level user data, stuff like your phone type and your digital session analysis and even your residence. And using those machine learning models, they're able to identify the best user clusters with the highest predictable LTV, the long-term value of those customers, and then they enable the businesses to target them automatically across the different platforms, like in Meta, Google, and so forth. So they're using those models to automate and make the prediction of what's the potential profitability of your user, and they're doing it using very smart AI and machine learning models.
That sounds amazing, incredibly useful. I need to use the one for practicing my English. That's amazing. We are so running out of time. Those questions, I apologize. But I cannot finish without asking you something about Kellogg. I just wanted to know, right? In what ways did Kellogg help you understand how to build a business or working with company founders?
Yeah. So I think, in many ways, I felt I majored in both finance and marketing, and I felt I received a very rounded view of running a business, identifying a real need and address it with a compatible solution, and build go-to-market strategy, and then how to finance and manage the business. In many ways, when we pre-seed a startup, we often go in our internal evaluation through a process that is very similar business questions about the product, the market, the channels, to what I remember we were debating on like case studies. I remember like in the strategy course until today of Professor David Besanko, which I really loved.
He's still here.
Which was amazing. And we were always debating on the different aspects of the businesses we were analyzing. The same goes for, remember, still the entrepreneurship course I took with Professor Stephen Rogers as well, as a very strong course. So I think I felt that I received a very good fundamentals that I use until today in my work.
That's fantastic. And what advice would you give to Kellogg students and graduates?
Yeah. So first of all, I feel I owe a lot to Kellogg. It was honestly one of my best life experiences, and it opened up like even in business acumen and even confidence to do what I do until today, that I can and should follow my dreams. And I would encourage students, first of all, to listen and learn, because I think they're amazing professors and amazing classmates. So I think the accumulated wisdom is priceless. I think they can feel fortunate that they're part of such an amazing institute with such a great legacy and surrounded with like top-notch people and minds. I think I would advise not to underestimate the network effect, and by that I don't mean that on the startup space, but the alumni network, because it's there for your entire career. I actually have invested in Kellogg alumni founders that approached us. As well, I also joined forces with other Kellogg alumni, VCs and angels, and we were co-investors in some other startups. And I think that after completing the MBA, I would recommend to choose a path that truly excites you, like and you feel really, really passionate about. And when you do, be persistent about it. Don't give up. I would also suggest that. As the saying goes, if one wants to go far, go together. Find a team of partners, either co-founders to a startup or co-investors, a team that you trust, and pick partners that you feel complement you. And I believe that the rest will work out.
Ron, I've been amazing. You've been giving such great advice and precise, and so that I hope people, as I was saying before, are taking notes. It's been amazing. And thank you for the shout out to the alumni network. That's why we do events like this, right? To keep this network alive. And I'm so glad it's important. It's been such a pleasure talking to you. I really feel inspired. This is an area I follow, and what you're talking just made me think so much. So thank you for joining us. I would have had so many more questions. There are questions asked, but unfortunately we are at time. But thank you to you and all alumni listening. It's been great.
Thank you. It was a great honor. Thank you. I'm really happy to participate and take part. Thank you so much for having me.
Thank you to you and everybody. Have a great rest of the day. Thank you.